Welcome to the pre-market insight for April 20th, 2020. Hope everyone had a wonderful weekend. We have so many charts and things to get through. Let's get going. Look at the the S&P 500 futures, and we're coming in just down about 53.7 points, about 1.86%. We're currently trading 28.17 on the ES. Now, recall we spoke about last week in one of the, I believe, Wednesday or Thursday's pre-market insight. We spoke about the fact that we had a gap formed from the news that came out overnight pertaining to the Gilead drug possibly being successful in terms of treating the coronavirus and being a possible vaccine going forward. And we spoke about the fact that we need to see where key balance is going to be formed. Where are the bulls and bears? Where are the market participants going to be able to demonstrate with a fair degree of decisiveness where they are going to take this market going forward? And we spoke about the fact that the first gap that we should be looking for, the close of the cash was right here at 27.88. And so the real sign of any change in market behavior, any change in market participant behavior would come if we were to test that 27.88 level. That would be a filled gap from Thursday's close. And given the fact that we had bullish news and we're actually retracing right back to where we closed on Thursday, could be possibly taken as the first nuance of a change in market participant behavior, in this case of bullish defending the levels that they were doing so at higher levels versus allowing price to come in, i.e. sellers getting more aggressive on the offer and bulls pulling their bids and allowing the market to come in somewhat. So keeping it simple, Smarty, what do we have to look for today in today's session? Well, we're now trading 28.16, which is actually beneath, if we zoom down to the 15-minute chart, you can quite clearly see here, this 15-minute low that we made was 28.21 on the ES, and we're actually now trading beneath that price in the pre-market, and actually we're holding beneath. Again, another nuance. We always talk about the fact that anything is possible. The market can do whatever it wants when it wants it. And so you need to be taking clues and paying very close attention to market generated feedback to begin to take that information into your own decision making framework in order to extract value from the markets. So what is this telling us? Given that we have 28.21 as the low and we broke beneath 28.21 in the pre-market and we are currently holding beneath it, the market could have very well bounced from that 28.21 level. Again, bulls defending higher levels at key inflection points, but thus far we have not. And so for the opening 15 minutes, we definitely need to see how we're going to treat two levels. 28.21 to the downside. Do we get back above 28.21, hold, and begin to advance looking for higher levels that we would have made in Friday's session? Or do we come back to test this 27.88 level to the downside? That is the definitive key in terms of levels that the bulls need to defend in order to show that we do still have some short-term momentum to the upside. Let's take a look at gold, GC. We've spoken about the fact for quite some time now that we have both a monthly breakout, the highs here at 1704, and then we have on the quarterly chart, if we are able to close above this 1773 level on gold, gold is simply going to go wild in terms of both the human market participants buying that breakout as well as the algorithmic boxes buying that level as well if we were to get above and close 1704 and 1773 on the monthly and the quarterly level. Of course, that then sets us up for a test to the upside of the round number 1800, as well as the 15-year all-time high at 1923.70 very easily in sights. So given that we've had a bit of a small pullback, if we can just drop down to the 4-hour chart, you can see here that we have this clearly defined level just at around 1680, 1682 that we have seen proven to be resistance for quite some time. However, in the very most recent past, in the intermediate time frame, we have evidence of support. And so if we were to trade down into this, and thus far we've traded just near it, we had a low at around 1685, which may be close enough. Traded down into this area of support, I would be looking to get long gold here for a nice trade, at the very least, into the underside of this range here at around 1733. Of course, if we use the gold ETF, similar levels on that would be this level here, just at around 157. We spoke about that on Thursday or Friday's pre-market insight, looking to possibly go long as we see and watch for the market reaction of participants at that key level if we were to get there in today's trading session, looking to go long gold. Let's take a look at some of the few leading names in recent trading action. We have Netflix. Remember we spoke about in Netflix on the weekly. We have an all-time high here made at 423 in trading session last week. And given the fact that we are coming into what is known as a binary event, we have Netflix earnings on Tuesday, the 21st, I believe, after the market closed. I would not be chasing Netflix to the long side here, only with premium that I absolutely have, happy to lose if it goes south on me in terms of the Netflix announcement coming tomorrow. Given the run-up that we've had, it is only prudent to begin trimming longs into this event, and possibly only playing with option premium versus pure stock. You can see we have some very clearly defined levels. If we go down to the hourly, just last week, Monday, Netflix was trading at 368. The low here was 367.72. So Netflix was trading at 367.72. That was the time, or just above this breakout here at the recent highs at around 383, was the time to be able to speculate to Netflix on the long side. And if you had done so, you got a really nice push to the upside, hitting, of course, breaking the all-time high at 423. We consolidated there for just a moment as we saw some selling come in, but then we broke again to the upside, hitting a new high of 449.52 in the regular trading hours. Where Netflix goes to next is anyone's guess because of the binary event that is coming up. It's earnings. However, there are some opportunities if we do get pullbacks into lower levels to purchase Netflix. If we zoom down to the 4-hourly chart, of course, very prominently, we have the 392 area. And if we were to get there to the downside, we also have the 360 area as well. Now, I believe Netflix earnings are pricing in. Let's just take a quick look at the options. Pricing in a $51.40 move. So just over 12%. Just over 12% for its earnings, which would take us at this point 50 up or 50 down from where we are currently trading at Friday's close. Well, actually in the pre-market right now at $435.25. So $50 on top of that is going to be $485, and then $50 beneath that you're looking at $385. So we're currently pricing in a move back to the top of its most the range that it broke out of, and if not to the upside, we're pricing in $485, so almost a move to near 500. But of course, the option premiums would already have that priced in. So be very careful if you're looking to trade Netflix earnings. I would probably use some sort of spread in order to take advantage of the implied volatility coming out of the options. Your long option does not get hit, or even your short option doesn't get completely hit on the implied volatility crush that is sure to follow. Let's take a look at Amazon. Amazon has also been trading gangbusters. Amazon was my trade of the month for December. I went long Amazon in the 1740 area. Where was that? Over here. 17. Yeah, right around here in December 1740, we went long Amazon and took that trade off sometime in, I believe, the second or third week of February. A nice risk reversal play to the upside. I think that was probably the bulk of the gains in our monthly advisory service. So what do we do here with Amazon? Amazon currently trading $23.90 in the pre-market. We just made a new all-time high at $24.61 last week. Some levels of interest to the upside. We have this gap and former all-time high here at $21.86 to target on the downside. If we do see any weakness in Amazon, that would be a spot to definitely nibble long. In terms of some more active levels, we have this level here at just around, I would say, 22.84, possibly on any weakness in the market, given that we have what seems to be a change in market nuance today in terms of the bulls not defending higher levels. If we do see a pullback into this 22.84 level, that might be a spot to get long Amazon if you're looking to play its earnings. I believe it's later on this week. Google's is next week. So we'll take a look at, of course, and to the short side, we have this all-time closing high at 20, what is that? 24.08. So just about another 18 points to the upside. If we are looking to probably tactically go short intraday, Amazon 24.08 would be the spot that you'd be looking to begin scaling into an Amazon short. Let's take a look at Google. Google has been underperforming its FANG brethren. And as you can see, we're coming up just about to the 50-day moving average, just above the 200-day moving average. And so this is a good point where buyers and sellers are experiencing a bit of a tussle between who is going to be more aggressive on the bid, the buyers, or on the offer, the sellers, to decide the next move for Google, 5 or 10% up or down. Again, Google is reporting earnings next week, so be aware of any names that you're trading this week, next week, and next. We are in the start of earnings season, so always be aware of not only the earnings date of your particular securities, but the earnings date of the securities that move with it, that are in the sector with it. So Google is in tech. Google is a big component of the NASDAQ and the S&P. So when Netflix and Amazon report this week, it could also affect, in terms of sentiment as well as the index weighting, Google's performance. So just be aware of that. Option premiums will be juiced in order to take advantage of that as well. So be very careful with how you're trading option premium this week, particularly in these technology names. So let's zoom down to the lower time frame so we can just get a clear look at what is happening. We have this high here, prominent high, Friday's high at 12.90 to look for on the upside, to probably lean short against if we do get some firming up of the bid under the market this morning into the afternoon. I'm not sure that Google will get there, but it is a possible area to lean short against. Of course, we have Friday's low as well, 12.66. We're currently trading under that in the pre-market, trading under 12.60. Again, a change in market participant behavior. Thus far, for the past, I would say, 2 or 3 weeks, every prior session low has been vociferously defended. Last week, Monday, we had a slight change that I would call probably a short trap, in that we broke beneath the pre-market low, probably just a few points, and then we reversed back into the range. And of course, naturally, knowing the nature of price, the natural target is to the other side of the range that was established in that trading session. So if we do not get back above 1266 and hold, we would be looking to fall back into the range that we've had before between this high here at around 1243 and this low here at 1240. So we would be, actually no, the low here at 1228. So if we don't get and close above 1266 in today's session, then the natural short thesis would be to target the other side of the range here at 1228 on Google. Let's take a look lastly at TLT. So we spoke about the fact that we had some really nice ranging action. If we zoom back out to the 4-hourly chart, we had some really nice, and I'll just take this off for a moment. We had some really nice tight consolidation on the TLT right here in this range. And that sort of price action always gets me excited, always gets me looking for asymmetric risk to reward opportunities, because I know from the nature of price goes from its state of balance to imbalance, from imbalance back to balance. So given we have such a tight consolidation, such a tight area of balance on TLT, the natural expectation is I want to be looking for an opportunity to trade this coming out of its balance. And we spoke about how to trade balance just maybe about a week and a half ago in one of our weekend classes, as well as I mentioned it in one of our pre-market insights. Basically, we're looking for, if we just, if we zoom down to the hourly just to make this a bit more clear. You can see here we have a low on the TLT of 163.48, and we have a high here at 166.19. And so looking for a break of that range, we would, if we broke and held above 166.19, which we did, then we would be looking to test the most recent intermediate highs, which were clearly here at this level around 170.11. So we spoke about once we got into the 170 level, we ought to be looking for how market participants are going to react. Are we going to see some impulsive selling? Are we going to pause and begin to build a new area of balance so that we can possibly test levels higher into the 175 level that we identified at that time? So that's one hypothesis to the upside. If we break the top of the range, then we're looking for the most recent swing or intermediate high. In this case, it was 170.11 on the TLT. Conversely, on the short side, if we were to have broken beneath this balance at 163.55, then we'll be looking to target the opposite end of the range here at around 152. And if we do not have a break and hold of either side, then the natural consequence is just simply playing for the continued range bound movement. So if we break and held, then we'd just be targeting the other side of the range. If we broke but came back into the range, we'd be looking for a retest of the other extreme of the range on the short side. So that's it for today's guys. Pre-market insight extended, and we shall see you later on this afternoon where we do a recap and some actionable information pertaining to the small account challenge. Thank you for joining me. Be safe out there today, guys. Cheers.